dumping fake money into the system. So yeah, the dollar's going to die. It's not a matter of when, if, it's a matter of when. And when they start lowering interest rates, the dollar's going to go way down. And price of gold is going to go way up. And we don't give financial advice either. We just tell you this is the way we see it, and this is why. Do what you want. Think for yourself is the motto of the Trends Journal.
In today's episode, financial expert Gerald Celente warns of a big banking crisis on the horizon. With many people working from home, office buildings are now mostly empty. Property owners are struggling to repay their loans as interest rates rise and tenants leave. This could lead to many banks failing, which would hurt the global economy. Artificial intelligence is causing many people to lose their jobs. Celente explains that as companies use more AI, they are cutting jobs to save money. This is happening in many fields, from factories to newsrooms to fast food. The rise of AI could lead to more unemployment and economic problems. Moreover, the United States is facing a huge debt problem. The national debt is growing very quickly, and high interest rates make it harder to manage. This financial strain is hitting the middle class hard. Many people are losing their homes, and big companies are buying up these properties. More and more Americans find it difficult to afford homes. Celente also criticizes the media for focusing on trivial news while ignoring important issues. A few large companies control most of the media, distracting people with celebrity gossip and entertainment. This keeps the public from paying attention to major problems like economic instability and global conflicts. As a result, many people are unaware of the serious challenges we face. Now we'll show you more clips of the latest interview, but first, smash the subscribe button, turn on notifications so you do not miss out our daily recaps.
And the dollar's going to go down when they lower interest rates. That's the only reason the dollar's strong. And much of the world has had enough of America's economic and geopolitical hegemony. The BRICS are going to get bigger, and they're going to do everything they can to get rid of the dollar. And it's ridiculous. There's no solving this problem. The debt's not going to be paid off. You're looking at it adding $1 trillion every 100 days to the debt level. And now you have high interest rates, so it's even costing more to service the debt. There's no way they're going to ever do it. But the middle classes just keep shrinking and shrinking and shrinking. The data came out that they did a study of like over 500 counties in the United States, and 80% of the houses were unaffordable to the middle class. And then again, going back to the bigs, back in 2023, he bought almost 30% of the homes, and then they rent them to people. And that happened, by the way, with the with the panic of '08. And that was caused, part of it, by the subprime mortgages. You don't have a job, you're deep in debt, don't worry about it. Sign over here, you could buy a house. So whenever all these foreclosures happened, the Blackstones and the others started buying up all of these homes. And they're going to be the owners. America, I call it plantation workers of Slavelandia. The middle class is dead. Here's some data right here. Let's see. According to a report published by ATTOM, A-T-T-O-M, which examined 572 U.S. counties and determined that median-priced homes is about 80% of those in those areas are out of reach for the average income earner, who makes $71,214. In fact, the major home ownership expense on typical homes sold during the second quarter required an annual income of almost $91,000 in order to consider affordable, which is 25% higher than the average national income during the coal mine. But that's going to also cause the United States to lower interest rates, because developing and emerging markets, they're lowering their interest rates. And it's one big club. You go back to the Great Depression. When England was going down, they asked the United States not to raise interest rates before the crash of 29. And the United States didn't raise them. Well, they were raising them. And they're going to do the same thing now. They're going to have to lower interest rates so the other countries don't go down. And it's only a matter of time. And I think the time is coming, definitely by September in the United States. But again, very important, as the lower interest rates go, the deeper the dollar falls. The deeper the dollar falls, the higher gold prices rise. And again, one of our top trends for 2024 was golden year for gold. Gold prices have gone up over $300 an ounce since we made that forecast. And as the way the geopolitical and socioeconomic trends are going, we can see gold hitting $3,000 this year, an ounce. And again, we're also very bullish on silver, and Bitcoin's a bet. We're betting on Bitcoin. That's a bet. That as we look at it, but we're very bullish on it.
In today's news recap, gold and silver's high price recession. So China didn't buy any gold for its central bank reserves for the second month running in June, writes Adrian Ash at Bullion Vault. Chinese consumers have meanwhile vanished from the country's jewelry stores, and Indian households have also quit buying. Silver-backed ETF investment funds have grown less than 5% in size from last month's 4-year low, while gold ETFs ended June at their smallest mid-year size since 2019. After making out like bandits in 2021-22, retail gold investment dealers and mints are really struggling as high prices combine with high interest rates to crush Western demand for coins and small bars. The world's bullion markets this spring set new all-time gold price highs day after day and came within 1 cent of $2,450, while silver topped $32.50 for the first time since 2012, adding almost 45% in U.S. dollar terms inside 11 weeks of silver trading. Yes, that surge has burnt itself out. But silver ended last week with its highest Friday finish in London since the 11-year high it set in late May, down only 2.2% from that Friday's weekend peak. Gold, meanwhile, recorded its 5th highest ever Friday for U.S. and Euro investors. Even the British pound's clear relief at Labour winning a landslide UK election victory over the Conservatives still gave gold its 6th best weekend in history against sterling. Now we'll show you more clips of the latest interview, but first, smash the subscribe button, turn on notifications so you do not miss out our daily recaps.
It only changed. What did you began to saying that Russia's not trustworthy, America's not, China's not trustworthy? Is that the language you used? Worthy? Germany's trustworthy? Oh, France is trustworthy. Oh, the UK is so trustworthy. Oh, what are they talking to 6-year-olds? Trustworthy? Look at the little freaks running the show. Trustworthy? Grow the hell up. They've had enough of America. They've had enough. Gold, all right. Tell you a quick gold story. I have a photograph of me and John Connally. John Connally was the governor of Texas that sat in front of JFK and took the bullet in the back when they slaughtered Kennedy. He wanted to meet me because in this book, Trend Tracking, that I wrote in '89, I had forecast a new third party, and someone like Ross Perot would be the candidate. So he wanted to meet me. So I met him in Dallas. I have a photograph, I'll show it to you later, of me, him, and his wife in front of the book depository where Kennedy got assassinated. His first time back since the assassination. And he said to me, we're going back into the Anatole Hotel. This has to do with gold. I read your book. He said, it's a fine piece of work, and I know your heart's in the right place. But you don't have a clue what's going on. And neither do the American people. Now remember, this is the John Connally that was the governor, Democratic governor of Texas, that took the bullet in the back. He was also the U.S. Treasury Secretary under the Republican Richard Nixon that took us off the gold standard in 1971. They invented this thing about taking us off the gold standard so they could keep creating fake money backed by nothing and printed on nothing. Again, tracking trends is the understanding of where we are, how we got here, and where we're going. I grew up during the 70s. I got born in 46. I was there in the 70s when inflation was skyrocketing. What brought inflation up? Oh, you forgot about the Vietnam War? When they pumped all this fake money in to keep fighting that war? No, we're not going to talk about that. Nobody talks about it. Inflation was skyrocketing. They got rid of gold so they could keep dumping fake money into the system. Go back to the COVID war. Go home. Close down your business. Hey, here's money. Don't worry about it. What did Trump dump in? Like $4 trillion, $3 trillion or something? Biden another couple of trillion more? Where'd you get this money from? Where'd you get this money from? So yeah, the dollar's going to die. It's not a matter of when, if, it's a matter of when. And when they start lowering interest rates, the dollar's going to go way down. And price of gold is going to go way up. And we don't give financial advice either. We just tell you this is the way we see it, and this is why. Do what you want. Think for yourself is the motto of the Trends Journal.
What do you think of today's episode? Do you agree with Gerald and his trends for the end of the year? Will AI destroy America? Is gold and silver the only way to be protected against a major banking collapse? Post in the comments section down below your honest opinion. Share this video with a gold bug. And check this video right here because you'll love it. I see you on the other side.